Good day. For today's video, we'll be discussing the internal analysis for Keurig Dr. Pepper. So Keurig Dr. Pepper Incorporated is a manufacturer and distributor of non-alcoholic beverages including coffees, carbonated soft drinks, ready-to-drink tea, and etc. But first, I'll take you through the journey of Keurig Dr. Pepper on how a small coffee roaster in Vermont grew into a beverage powerhouse. So correct Dr. Pepper began as Green Mountain Coffee Roasters in 1981, founded by Bob Steeler in Vermont. So the company grew rapidly and went public in 1993 under the stock symbol GMRC. And in 2006, GMCR fully acquired Keurig, solidifying its dominance in the single cup coffee market. A decade later, in 2016, Job Holding Company took Keurig Green Mountain private in a $13.9 billion deal. And by 2018, Keurig merged with Dr. Pepper's Snapple Group, an $18.8 billion acquisition, went public again and formed Keurig Dr. Pepper, which is now the third largest beverage company in North America and remains a key player in the industry today.
Moving forward, this is Dr. Pepper's mission statement. Meanwhile, this is Dr. Pepper's vision statement. Let's critique using the following criteria. As for mission, it suggests an action memorable and realistically achievable. However, it does not paint a clear picture and no sensible directions. Meanwhile, as for vision, it does paint a clear picture, look toward the future, realistically achievable, and have sensible direction paths. However, it is not memorable. Thus, we suggested some improvements for the company. Keep drink well, do good as a slogan, but refine the mission for clarity. For instance, we craft beverages that enhance every moment while making a positive impact on people, communities, and the planet. This keeps inspirational while making their industry focus clearer. Keep the core phrase as a vision statement and improve by shortening the extended part for it to be more memorable. The following are the values of the KDP. All of the values are achieved except for the last value as the company followed the trend rather than being bold in merging and also facing challenges in terms of supply chain and labor practices.
Next are the individuals who hold essential positions in Dr. Correct Pepper. At the helm is Tim Coffer, the CEO, bringing over 30 years of experience in consumer packaged goods. He previously served as a chief operating officer and a strong track record in growth, business transformation, and acquisitions. So before KDP, he held key roles at Central Garden and Pet Mandeles and Kraft Foods. So he's focused on expanding KDP's beverage portfolio and direct store delivery network. Supporting him is an experienced executive team overseeing finance, marketing, operations, and supply chain to drive innovation and efficiency. On the other hand, Bob Garmort, the executive chairman of the board of directors, led KDP's rise to the S&P 500 and Nasdaq 100 as CEO in 2018. With deep expertise in brand turnarounds and M&A, he continues shaping KDP's long-term strategy.
Now for the business model analysis. This is the business model canvas for KDP. Starting with the key partners, we have coffee growers and suppliers, national retail and distribution partners, manufacturing and packaging partners, strategic brand partners, and technology partners. Next, for the key activities under value proposition, we have for channel, beverage innovation and product development, quality assurance. For channels, multi-channel logistics, manufacturing scalability. And for customer relationship, we have sales and marketing, and customer relationship management systems. And finally, for financial, we have portfolio diversification and dynamic pricing. For our key resources, we have beverage brand portfolio, elevated manufacturing facilities, strong distribution network, intellectual property and patents, skilled labor force, and sustainability infrastructure. Next, for value propositions, we have convenience, product variety, easy access, customization, sustainability, innovation, and health-conscious formulations. For the customer relationship, we have loyalty programs, digital platforms and mobile apps, customer support and service channels, social media interaction and community building, targeted marketing, and recommendations. For channels, direct store delivery network, e-commerce platforms, online marketplaces, direct-to-consumer websites, wholesale distribution network, and international distribution. For customer segments, we have home coffee consumers, office and workplace environments, millennials and younger generations, health-conscious consumers, and convenience-seeking individuals. For cost structure, factors below amount to a total cost of $8.9 billion. For the revenue stream, factors below generate a total revenue of $12.6 billion.
Now, let's take a look at KDP's PESTEL framework. For political factors, KDP is affected by U.S. trade policies, FDA labeling regulations, and state sugar taxes, all influencing cost and revenue. Federal health initiatives also push for product reformulation. For economic factors, the rising commodity prices and inflation have increased production and distribution costs. While KDP maintains a strong market share, economic downturns are shifting consumers' preference towards a more affordable beverage options. For social factors, consumers favor healthier and sustainable products, driving growth in the health and wellness beverage market. Demand for sustainable packaging and single serve convenience continues to rise, prompting KDP to invest in innovation. For its technological factors, KDP invests in automation, manufacturing efficiency, digital platforms, and consumer data analytics to enhance production and e commerce growth. For legal factors, the company complies with FDA labeling regulations and holds numerous patents for brewing and packaging. Environmental compliance is a key focus with investments in sustainability initiatives. For environmental factors, sustainability is a priority for KDP with a strong commitment to recyclable packaging and renewable energy to reduce its carbon footprint.
Keurig Dr. Pepper's major rivals are namely Coca-Cola and PepsiCo. In 2024, Coca-Cola is still considered the market leader, taking up to 40% of the market share, followed by PepsiCo taking up to 30% of the market share, and Keurig Dr. Pepper taking up to 10% of the market share. The strong growth of competitors was likely driven by increased consumer demand, strategic pricing, and expansion across key markets.
Next is the analysis of KDP's financial performance. Under profitability analysis, gross margin and net profit margin remains robust, demonstrating the company's ability for price control and converting revenue into profit to be efficient. However, earnings before interest, taxes, depreciation, and amortization margin fluctuated, peaking then declining, possibly due to rising operating costs or shifts in the product mix. KDP's liquidity position has weakened over time. The graph suggests reduced short-term liquidity and a higher reliance on short-term liabilities. Additionally, the cash flow ratio raises concerns about the company's ability to generate sufficient cash for operations. On the leverage analysis, particularly debt to equity ratio, KDP has significantly reduced its debt burden. This indicates strong deleveraging efforts, lowering financial risk. However, the company still maintains a notable level of debt. Despite reducing debt, KDP's debt service coverage ratio remains below 1.0, meaning its earnings may not be sufficient to fully cover debt obligations. Under efficiency analysis, KDP's inventory turnover ratio improved to 10.22 times in 2023, reflecting better inventory management and demand forecasting. However, for the asset turnover ratio has declined significantly. This may suggest inefficiencies in asset utilization or increased investment in long-term assets that have yet to generate proportional revenue. Cash flow trends reveal potential concerns. Gap signals reduce cash generation. Investing cash flow remains negative except for a brief positive spike in 2021, indicating continued investment in expansion. Financing cash flow is consistently negative, reflecting efforts to pay down debt and return capital to shareholders rather than relying on external financing. Return on investment peaked in 2021, which signals strong operational performance, but continued to decline later on, which implies challenges in maintaining its performance or investment efficiency. Just like the ROI, return on assets peaked in 2021, which suggests improved usage effectiveness of assets, but also continued to decline, which signify asset leverage issues. So, in summary, KDP has shown strong profitability and improved inventory management, but liquidity and cash flow concerns remain. While the company has reduced debt, financial risk persists due to low debt service coverage. Continued focus on cost control, operational efficiency, and asset leverage will be crucial for sustainable growth.
For the value chain analysis,
For the primary activities, first is the inbound logistics. KDP's approach includes reporting the percentage of responsibly sourced coffee and cocoa verified through third-party certification programs. The company will also disclose audit results using its supplier rating system, the same method applied to its brewer supply chain. For operations, manufacturing and bottling plants across North America includes the manufacturing, processing, and packaging of its diverse beverage products. Key processes involves mixing ingredients, carbonating soft drinks, and packaging beverages in cans, bottles, and pods. KDP also prioritizes automation, sustainability, and regulatory compliance to enhance efficiency, reduce environmental impact, and maintain product consistency. For outbound logistics, we have direct-to-store delivery and direct-to-customers delivery. For marketing and sales, KDP is leveraging its diverse brand portfolio, multi-channel advertising, and consumer-driven promotions. Multi-channel advertising such as healthier beverages, sustainable packaging, and premium coffee experiences, utilizing campaigns, TV ads, sponsorships, and influencer partnerships to enhance brand visibility. It also includes promotional campaigns and discounts and customer loyalty programs. For customer service, this includes Keurig machine maintenance, repairs, and customer support, subscription services for coffee pods, online customer service and chat support, and handling complaints and product recall. Through these efforts, the company enhances customer loyalty and maintains a strong brand reputation.
for the support activities, for the firm infrastructure, strategic mergers and acquisition, the 2018 merger of Keurig Green Mountain and Dr. Pepper Snapple expanded KDP's beverage portfolio and market reach, corporate social responsibilities, sustainability initiatives like reducing plastic waste and ethical sourcing of coffee and ingredients, for human resource management, team first culture, KDP has encouraged people to find their community on day one, employee development, engagement, and well-being. KDP implements programs that promote open dialogue and continuous feedback to enhance employee engagement. And lastly, diversity and inclusion. To support this commitment, thousands of employees are given privileges in Employee Resource Groups or ERG. For technology development, they have circular economy. KDP is dedicated to promote circularity by designing sustainable packaging, reducing virgin plastic use, and increasing recyclability. Keurig Coffee Brewing System. KDP invests in coffee brewing technology, particularly through its Keurig single-serve systems and eco-friendly pond innovations. And lastly, procurement, responsible sourcing. KDP applies a purchasing practices that consider the environmental, social, and economic impacts from procuring products and raw materials that aims to minimize adverse impacts and foster positive outcomes.
Now, let's focus on the current strategy of KDP, a company that continues to evolve as a major player in the beverage industry through innovation, strategic partnership, and a strong focus on sustainability. Let's start with KDP's competitive positioning. With its diverse portfolio strategy, KDP maintains a mix of own brands, licensed products, and alliances across coffee, packaged beverages, and concentrates. KDP's value proposition targets multiple price points, providing affordability during economic downturns and premium options when consumers' confidence is high. These help KDP remain competitive and profitable even when others struggled with price sensitivity. For KDP's marketing initiative strategy, KDP invests heavily in marketing across TV, digital, and print. A key focus is digital and social media, particularly to engage younger audiences. Strategic partnerships like those with NFL and NCAA March Madness boost brand visibility and emotional engagement during peak consumer attention. KDP's brand personality combines nostalgia with modern, playful voice and resonating across generations. And in 2023, they introduced a responsible marketing policy ensuring their content remains ethical, inclusive, and compliant in advertising. Innovation is central to KDP's growth, hence, product innovation strategy continues to launch. KDP's research and development investment supports product development and sustainable ingredient solution. KDP also aims for 100% recyclable or compostable packaging under the Drink Well, Do Good initiative by the year 2023. KDP uses a hybrid distribution model, balancing direct store delivery, warehouse direct, and third party logistics. They've also partnered with competitors like Coca Cola and PepsiCo for broader distribution, as well as expanded their presence in vending, micro markets, fast food, and hospitality sectors. Looking forward, KDP is focused on three key areas: sustainability commitments, in which the company pledges to support regenerative agriculture and reduce its environmental impact; market expansion, which investments in the energy drink sector secures entry into a growing market; and lastly, with its digital transformation, KDP is using AI and data analytics to optimize operations, cut costs, and personalize consumer experiences, driving smarter, faster decisions across the business. Now, let's take a look at KDP's key resources and capabilities using the RIO framework. First, we have brand recognition. KDP's strong brand is certainly valuable and rare, and the company is well organized to leverage it. However, since brand recognition is not too difficult to replicate in the long term, this only gives them a temporary competitive advantage. Second is their unique flavor portfolio, especially its signature 23 flavors, adds value and is hard to imitate. While not particularly rare in today's crowded beverage market, it still contributes to competitive parity by keeping them relevant and differentiated. Third is KDP's network distribution, which is one of its strongest assets. It's valuable, rare, costly to imitate, and efficiently organized, earning the company a sustained competitive advantage. This network allows them to reach a broad range of markets faster and more effectively rather than many competitors. Next is their marketing initiatives and strong social media engagement, which are considered valuable, rare, hard to imitate, and well executed. These efforts help KDP maintain a sustained advantage, especially among younger consumers. Another key strength is their strategic partnership, particularly with Coca Cola and PepsiCo for distribution. These are rare and extremely hard to replicate, giving KDP a unique edge and another sustained competitive advantage. Lastly, is their sustainable initiatives, especially with packaging and convenience, which are valuable and costly to imitate, and KDP is organized to execute them as well. While these are not rare in today's eco-conscious market, they still provide competitive parity, keeping them aligned with current consumer expectation. In summary, the KDP's value analysis shows that while some assets offer parity or temporary advantages, their distribution network, marketing efforts, and partnerships deliver long-term strategic benefits that are hard for competitors to match.
In this slide, it summarizes key areas for improvement for Dr. Craig Pepper after a thorough internal analysis. So first is the mission statement lacks specificity regarding product quality and the implications of doing good, which dilutes brand clarity. And the vision statement is overly broad and lacks actionable specifics, which make it difficult to measure and progress. So next is the high debt to equity ratio presents financial risks, limiting flexibility for future investments and growth initiatives. Next is the oscillations in cash flow ratios indicate potential liquidity concerns, necessitating in improved cash management strategies. Next is with only 10% market share, KDP faces vulnerabilities against giants like Coca-Cola and PepsiCo, necessitating strategic partnerships to enhance market presence. Heavy reliance on retail partnerships for distribution poses risks if relationships become strained, requiring diversification strategies. And lastly, enhanced rigor in managing the supply chain is needed to ensure consistent quality and mitigate disruptions in volatile market conditions. That ends our presentation. Thank you for listening.